Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. Any episode of the Friday Five just wouldn't be complete without a healthy dose of SPACs. Believe it or not, so far in 2021, there have been 145 special purpose acquisition company or SPAC initial public offerings that have raised more than $44.5 billion. The average deal size was $307 million. That's a pace of more than 3 SPACs per day, every day, including Saturdays and Sundays. That compares with just 55 traditional IPOs year to date. So far this year, SPACs outnumbered traditional IPOs by a ratio of almost 3-to-1. For context, 248 SPAC IPOs raised $83 billion in total last year. That deal and dollar volume count was already record-breaking, as it was more than 6 times the amount raised in 2019 and more than 4 times the number of SPAC IPOs in 2019. At this pace, we will smash last year's record by mid-year this year. Have I mentioned that we're in the midst of a frothy market? In further SPAC news this week, Lucid Motors is getting close to a deal to go public at a roughly $12 billion valuation. The merger between Lucid and Churchill Capital IV Corp. would be the biggest in a string of deals by EV makers such as Nikola Motor Company and Fisker that have gone public by combining with SPACs. Churchill Capital IV has initiated talks with investors to raise more than $1 billion by selling shares in a private investment in a public equity transaction for the deal with Lucid. The size of that transaction could reach $1.5 billion or more based on investor demand. Interestingly, AutoNation announced that it sold its remaining stake in Vroom for proceeds of $109 million and realized a cash gain of $87 million in profit. In total, AutoNation realized a cash gain of $165 million from the investment during Q4 of last year. Back in October 2018, AutoNation made a $50 million investment in Vroom for 7% of the company prior to its IPO, which raised some eyebrows in the industry. At the time, they positioned it as a strategic investment where AutoNation could learn about online e-commerce. I'm not certain how we should interpret AutoNation selling out of their stake in Vroom entirely, but that 7% stake today would be worth more than $441 million, or a 9 times return on their initial investment over a span of just 2 years. Swift Navigation, focused on global navigation satellite systems and precise positioning technology for autonomous vehicles, automotive, mobile, and mass market applications, has raised a $50 million Series C round of financing led by existing investors New Enterprise Associates, Eclipse Ventures, and new investors including Epic Capital Group, KDDI Open Innovation Fund. To date, the company has raised a total of $97.6 million in funding. Swift's customers across the globe include automotive OEMs, last-mile delivery providers, mobile providers, and those building rail, industrial, micromobility, and IoT platforms for mass market applications. SmartHop, an AI-powered app that helps interstate truckers make their routes more efficient and lucrative while removing a lot of the administrative hassle for drivers, has raised $12 million in a Series A round, bringing the company's total funding to date to $16.5 million. The round was led by Union Square Ventures. If you don't subscribe to Fred Wilson's daily blog, you're probably missing out. He's probably the most insightful VC that I've ever come across. BorgWarner is expanding its electrification portfolio after signing an agreement to acquire Akasol, a maker of battery systems for commercial and off-road vehicles based in Germany, at a value of 727 million euros or $880 million. Under the terms of the agreement, a BorgWarner unit will initiate a voluntary public takeover of all outstanding shares of Akasol at a price of 120 euros per share, a 23% premium to the 3-month average price. Self-driving trucking startup Pulse AI raised $200 million in a Series B financing from Chinese investment firm Guotai Junan International, which is based in Hong Kong, London-based venture firm Hedosophia, and Washing Group. Investors, including Menlo Park-based venture firm Sequoia Capital and Lightspeed Ventures Partners, as well as the venture arm of Chinese state-owned automaker SAIC Motor Corp, also participated in the deal. The funding will help the California-based startup as it begins mass production of its self-driving systems this year and aims to fill thousands of pre-orders from Chinese fleets in a joint effort with Chinese truck manufacturer FAW Jiefang Automotive, part of the state-owned China FAW Group. NextMV, a platform that optimizes and tests decision models for logistics companies, announced the close of an $8 million Series A round led by existing investor FirstMark Capital. Other investors include GitHub CTO Jason Warner, Seamless.ai founder Jason Finger, Stripe COO Claire Hughes Johnson, Ankit Agarwal from Greenhawk Capital, as well as other institutional investors such as 2048 Ventures, Dynamo Ventures, and Atypical Ventures. NextMV simplifies the process of optimizing and testing logistics-focused decision models. Consider a company like Grubhub that has to weigh a wide variety of priorities each time an order comes through on the platform, from speed of delivery to mileage on the driver's cars to overall efficiency. Metropolis is a new Los Angeles-based startup that's looking to compete with BMW Group-owned Parkmobile for a slice of the automated parking lot management market. Upgrading parking with a computer vision-based system that recognizes cars as they enter and leave garages has been Metropolis's mission since founder and chief executive Alexander Israel first formed the business back in 2017. Israel, a serial entrepreneur, has spent decades thinking about parking. His last company, ParkMe, was sold to Inrix back in 2015. And it was with those learnings and experience that Israel went back to the drawing board to develop a new kind of parking payment and management service. The company has raised $41 million in financing in total, led by VC firm 3L. Enovate Corporation, a specialist in silicon-dominant lithium-ion battery technology, announced an $81 million Series E funding and $191 million raised to date, led by Fidelity Investments. The California-based company is backed by well-known names like Groupe Renault, Nissan Motor Corporation, Mitsubishi Corporation, LG Chem, and Samsung Venture Investment, which indicates a promising solution for electric vehicles. Enovate focuses on the pure silicon anode to achieve high energy density, extreme fast charging, like 5-minute charging to 75% capacity, and reasonable cost and acceptable life cycle in batteries. Congratulations go out this week to Tyler McCormick and Sweetie Boy Transportation. The Center for Innovative Technology announced that CIT Gap Funds has invested in Sweetie Boy Delivers, provider of services that help easily transport vehicles from one location to the next for dealerships and consumers. The Cap Street Group announced the completion of the majority recapitalization of Trade Pending. Founded in 2014 and headquartered in North Carolina, Trade Pending builds software for car dealerships that brings accuracy, transparency, and simplicity to their customers. The solution leverages vehicle pricing data to enable digital retailing, optimizing online conversions, and maximizing profitability for trade-in vehicles. Congratulations to Bryce Englert and the Trade Pending team. So, on to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday 5 to share some of those companies each week with you. Today we'll look at two exciting companies to watch, Excite Automotive and ClickInns. Our first company to watch, Excite Automotive, serves over 1,000 dealers and leverages a team of over 400 highly trained field personnel to help dealers upgrade their vehicle merchandising efforts. With Excite Automotive, dealers can expect to merchandise their vehicles online faster and more consistently. Excite Automotive leverages best-in-class software to create stunning vehicle photos, videos, and 360-degree virtual walkarounds. Excite helps dealers organize and value the most important vehicle features on vehicle descriptions and cements their dealer brand promise at the point of purchase. Excite Automotive can even help a dealer upgrade their facility with a world-class studio from Car Studio Pros. With the November launch of Recon Logic, Excite Automotive offers a dealer-centered service that significantly streamlines the reconditioning and merchandising process of preparing vehicle inventory for sale. Now, vehicles can be retail ready in just 5 days or less, a much faster turnaround compared to the 12 to 14 days many dealers experience today. Excite Automotive is continuously innovating and can now assist dealers in finding even further efficiencies by consolidating the reconditioning and merchandising processes at the dealership or off-site in Excite Automotive managed facilities in select locations. Our second company to watch this week is Clickins, the next generation AI automatic vehicle damage inspection solution that enables insurance and automotive companies to automatically detect, analyze, and process external vehicle damage at high precision and consistency without the need for special equipment or skilled personnel. Clickins' revolutionary multidisciplinary technology is based on a combination of AI, deep learning, 3D modeling, applied mathematics, and computer vision, enabling accurate recognition and analysis of external damages to all types of vehicles. Clickins processes millions of daily vehicle inspections at 300 milliseconds per vehicle with more than 90% accuracy and repeatability. Their mobile and application APIs can easily be integrated into any of their partners' platforms. Clickins was founded in 2014 with a mission to automate vehicle inspections, helping insurance and automotive companies increase their reliability and efficiency while improving customer experience. Their team is comprised of highly skilled professionals from the technology, automotive, and insurance sectors, bringing their know-how into the company with the experienced business management. Headquartered in Israel, with offices and partners in the US and Europe, the company's SaaS platform provides 24/7 service to its worldwide customers. So that's your weekly Friday 5, a quick wrap-up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space with a ton of deals going on. Make sure you stay tuned in each week to stay up to date on the auto industry's technology M&A activity. I'll keep my fingers on the pulse of deals being done so I can share updates with you. If you're an early stage automotive technology entrepreneur looking to raise money, or an entrepreneur who wants to chat about the best timing and process to sell your company to achieve the best outcome, I'd love to discuss with you. Thank you for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.